Ladies and gentlemen, good morning and welcome to the third and final day of GFRID 2018. Silence please, thank you. We will now start with the first session for today on the transformation of Malaysia's money services business. Over the last decade, Malaysia's money services business sector has transformed itself into one that is characterized with integrity, professionalism and transparency. Now it can serve as a model for other countries to emulate and adapt to local circumstances. Over the next 15 minutes, Isaku Endo will deliver a presentation setting out the key highlights of this transformation and discuss good practices and lessons learned. Isaku is a senior financial sector specialist at the World Bank Group and has over a decade of experience in advising governments regarding the development of payment systems and remittances. I would now like to call upon Isaku to deliver his presentation.
Good morning. I hope you have you're having a good morning and then continue to have a good morning. It's a historical moment here in Malaysia in many ways, but this event is also historical, so we want to carry this momentum forward. But today, as you know, that today is the Public Sector Day, and we're going to discuss a lot of regulatory issues and on remittances throughout the day, especially in the morning. But I'd like to spend next 15 minutes or so to highlight some of the key changes or transformation that Malaysia has been experiencing. Since we are organizing in Malaysia, also the World Bank office here in Malaysia has a knowledge hub, and we also document the transformation and also reforms that Malaysia has done, and then share experiences with other countries. Yes. So Malaysia, as from a more broader sense, that Malaysia, first that the money service businesses, the name of the term money service businesses may not be familiar to some of us if you are working on certain industry, say remittances or money exchange. And then also different countries have different definitions. Here in Malaysia, the definition of money services business includes remittances, money exchange, and wholesale currency. So those are the definitions. For example, Canada has only, Canada's definition only includes remittances and money exchange. So it has some flexibility. There's no global definition of money service businesses. Now in Malaysia, in 2017, money service business transaction amount to 141 billion ringgit, which is 12% of GDP. And of that, 44 billion ringgit is for remittance services. And just to capture more on the global standards and best practices, we already discussed in the past few days on this. I think the slide is not working, but so on the payment system side, there are CPMI and the World Bank, at that time called CPSS, and the World Bank had the standards, issued the standard 2007, called general principles for international remittance services, to promoting transparency, consumer protection, governance, payment system, market condition. So that's the remittances. And then another one, in more on the financial inclusion, is the payment aspects of financial inclusion, which stipulates also remittances as a way to accelerate financial inclusion. And on the anti-money laundering side, there's a FATF recommendations. And then FATF APG regional body, and the World Bank also published a report on AML-CFT and financial inclusion. And then we've been discussing also risk-based approach. But there are a number of risk-based approach reports that relevant for remittance services. Now, Malaysia, the economy itself has transformed. Up to the 1980s, it's a more agricultural economy itself was dependent on agriculture. But the industrialization of the economy requires the more labor, so that invited foreign workers to fill the labor shortage. And then that was the change of the sort of a landscape of the economy, which needs laborers, foreign laborers, and also subsequently the remittance services. So in the beginning, the image of the picture that was shared with our friends at MOMS, Shalini here, that was the old photos of money exchanges in the past. But in the beginning, the Malaysia started to regulate or govern Exchange Control Act in 1953. At that time, only banks were allowed to deal with the foreign exchange, and then foreign exchange money changers are allowed to buy and sell foreign exchange. But later, 1998, Bank Negara Malaysia enacted Money Changing Act, which formally regulated the money changing industry, and then also stipulated that the foreign currency transaction must be conducted through commercial banks or money changers. Then later, in 2003, Payment System Act was implemented, and then remittance businesses, they opened the market to non-bank payment service providers or remittance service providers. Now, as you can see, that Malaysia has done reforms as the market required legal reforms. But up to Payment System Act 2003, the reforms were incrementary, and it became, legal framework became fragmented. And in 2005, the Bank Negara started this liberalization of remittance services, and then opened up even more to the market. Then there was some challenges in the market because the legal framework was not applied proportionately to different sizes of players. So even the very small players have to comply with the regulation similar to the large entities. And it creates a lot of challenges in terms of compliance, use of illegal channels. So that encouraged Bank Negara to form a task force in 2009 to review a legal framework. Also, at the same time, there's a global trend of tightening the non-bank role in remittance services. So after all this comprehensive review, the Bank Negara introduced this Money Service Business Act 2011, which transformed the industry. The legal framework, this one legal framework governs three industries: remittances, money changing, and then also wholesale currency. Then the policy side is that they also recognize that the challenges for foreign workers who cannot demonstrate or show ID card of a Malaysian issued ID card, so that the Bank Negara clarified that under the 3,000 ringgit, that foreign workers or the remittance companies can accept ID of their home countries as a form of ID. And also they introduced the principal agent arrangement. At that time, there were, at the time of the issuance of Money Services Act, there were more than 800 licensees, mostly money changers, and to increase the safeguard of the market, that they decided to have a principal and then smaller agents. So larger companies became principals, and then have an agent agreement with the smaller entities. By so doing, that this system itself introduced additional layer of oversight. So principal is fully accountable for the compliance of agents. Now, in the market side, as from only the remittances handled only banks to non-banks, and then many players in the market. And then the new law sort of encouraged market to reduce the number of the market players through the consolidation. So in 2017, only 344 MSB licensed. And also it's important to highlight the role of MUMs. This industry, the Bank Negara, of course, that they encouraged the industry to form itself to promote the safeguard professionalism and transparency, integrity. So in 2013, MUMS was formed. And the MUMS itself has a transformation program, and I understand it's in phase 3. And then also, I'd like to note that the World Bank, the Bank Negara, also other partners, including MUMS and the industry, that we conducted this Greenback project, which help us to understand the needs of migrant workers, also provide opportunity to educate or share information about remittance services among the migrant workers. So we appointed the Greenback ambassadors, who are actually employee of the service providers who can speak foreign language to communicate with migrant workers. Now, MSB Act, just quickly, as you probably know, that they focus on prudential requirements, operational and governance, risk management, control, transparency, and then money laundering, terrorist financing requirements, which really promote integrity and then transparency and also risk management. Now, I think initial lessons or good practices from the experiences of Malaysia, which is also happening now, is that the legal reforms were implemented to first develop MSB markets, also to strengthen supervisory and enforcement power, and also addressing the shortcomings through comprehensive review and approach. Also, the industry itself is committed to transforming the industry to promote the high degree of professionalism aligned with the national agenda by representing the interest of members through MUMS. But we recognize that the challenges continue to exist, but the constant dialogue between the regulator and the industry has addressed some of the challenges. And the Greenback was one example, but there are many examples and constant dialogue between the regulator and the industry. So as I mentioned earlier, the World Bank is now documenting this and is going to publish the experiences. But again, I think this experiences, not specifically in Malaysia, but also these lessons are very applicable to many markets. And also this can be the foundation of discussion today. Thank you.